All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at YFII, breaking it down on the daily chart. As always, we're going to go over some of the key levels to the downside and the upside, as well as the important levels we need to break to continue bullishness if we want to see some upside potential. So make sure to smash the like button, subscribe to the channel if you're new. And what we're going to do is we're going to start off with these three sets of lines right here. If you notice, I have these, it's very common for me to have these three sets of support and resistance lines. These are your Fibonacci retracement levels. The three most common and well-respected levels are the 38.2, the 50%, and the 61.8% levels. Now, initially, we had a little bit of a bull flag possibly forming here in the last video. And I said, we're going to look to see if we get a breakout to the upside. If we break out to the downside of this bull flag, we needed to hold above our 61.8% level. Otherwise, we could come back down and retest some of our previous lows. And sure enough, that's what we did. We bounced once here, and we also bounced twice in our previous demand zone. Now, if you're not familiar with what a demand zone is, it's very similar to an area of support. But rather than just being one strict line, okay, what it's going to be is it's actually going to be an area where there's an imbalance of demand. Now, demand is simply buy orders. So being that there was an imbalance of demand orders here after we consolidated, that's where the price levels got pushed up, and that's where the imbalance is. So we didn't get that price continuation. We did not hold above our 61.8% retracement level, and we ended up reversing and coming down and testing some of our previous lows. That's why you use these three levels, because nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, continuation, or you get a reversal, right? Where you get a move up, retracement, a little bit of consolidating, and then you break through those retracement levels. So with that being said, we now have our retracement levels for the downtrend, right? So we had this uptrend here. We were looking to see if we would retrace and continue higher. What we've done now is we've made a downtrend, and look at what we've done. We've came up and we've rejected the 38.2% retracement level many times, right? We have two candlesticks here, two more candlesticks here. All right, now we do have some wicks. We did have some wicks go higher up to the 50%, but ultimately we're going to be bearish below these three levels as we started a downtrend and we haven't consolidated and broken through those levels. So there's the possibility of that trend continuation, which is now a downtrend, because our biggest move as of recently was a downwards move. And if that happens, we could potentially come back and retest our demand zone here. And the demand zone is going to be right at about 1,000 up to 1,100. Okay, that's roughly your demand zone. And you remember, this is kind of like an area of support. There is a possibility if we come down into the demand zone, we could break it. But to me, this recent pullback that we had seems pretty justified. And the reason being, if we take a look at our RSI, this is measuring the relative strength of a token at its given price. And we can see we have a high and we have a higher high up here. So clearly the token was going higher, making higher highs, but we actually made a high and a lower high and a lower high over here. So we have bearish divergence. That's what it is whenever, the token's making higher highs, but your relative strength index is making lower highs. That's a term known as bearish divergence, and it indicates you could see some type of bearish activity. So we ended up getting a pullback off of that bullish divergence, and it seems pretty healthy and justified in my opinion. Now, the three major resistance levels that we're going to need to pay attention to and need to break out past for any type of possibility of a reversal is going to be 14.13, 15.15, and 16.17. Okay. Anything below these levels, we're going to be bearish below these levels and possibly continue the downtrend to retest our demand zone. Now, if we're able to break out, flip this to support our resistance at the 16.17 level, then we have the possibility of coming up and hitting some of our bullish price targets, which are going to be 18.66 as well as 17.18. Right. So that's, some of the necessary steps. Another necessary step is going to be breaking through this initial bearish divergence trend line. Okay. This could be an area that keeps pushing price lower and keep driving relative strength lower. If you want to be bullish on this, you want to look for a breakout and then retest this and claim it as support. Okay. You don't want to see a look above and fail where buyers attempt to take control, fail at taking control and sellers show that they're the ones who's really in control, a look above and fail would be more bearish and indicative of further downwards price action. So ultimately, that's what you want to look for. If you're bullish, you want to see the RSI break through this level, all right, and be able to hold above that level enough to push us past our 61.8% retracement level, because otherwise we could see what happened over here where we moved up, consolidated, and then retraced down into our demand zone. All right. We could be doing that, like trend continuation. All right. Or we could end up getting the consolidation and reversal that we're looking for to take us up to those bullish price targets. Hopefully you enjoyed the video. If you did, smash that like button, subscribe to the channel. I do viewer requests every week. So all you got to do is comment down below and I'll make a video just like this one on whatever cryptocurrency or token you'd like.